So if we break that, the target would be around 217, 218, which is a little more than 199, but again, it's very close in the scheme of things. And if we take a little longer to work to this breakout, if we keep within this triangle for the next few days, the target will get a little lower because the breakout price will be lower. So yes, he still has that target around 200. And the most interesting thing of all, though, is that he expects that to happen fairly quickly.
Silver may be quietly preparing for its next explosive move. After a powerful rally and months of consolidation within a tightening triangle pattern, technical signals suggest that a breakout could be approaching. Some analysts believe that once this resistance finally gives way, silver could surge rapidly, with long-term projections pointing toward dramatically higher price levels. If history and market cycles repeat, the current pause may simply be the calm before a major upward move in the silver market. According to financial commentator and market analyst Mario Innecco, recent movements in silver prices have been following patterns that some analysts tie to long-term mathematical cycles, reflecting recurring market rhythms over decades or even centuries. He highlighted the research of the Gnome of Zurich, whose analysis connects silver price targets to Lucas numbers, a sequence closely related to the Fibonacci series. Within this framework, key historical price levels such as 49, 77, and the recent peak near 121 align closely with these numerical milestones, suggesting that silver's price behavior may not be purely random but influenced by repeating long-term cycles. This perspective provides a lens through which the current market dynamics can be interpreted, showing how past trends may help anticipate future movements. Innecco also emphasized that despite the recent correction following silver's strong rally, the overall trend may still be bullish. He described the present price action as a consolidation phase forming a triangle pattern, a structure that typically occurs after a significant upward move and often precedes another surge. By combining technical analysis with the Lucas number framework, he indicated that once this consolidation phase concludes, silver could resume its upward trajectory, with a potential long-term target near 199 for the next major leg higher. This approach underscores the importance of considering both historical cycles and technical signals when evaluating silver's market prospects, reinforcing the idea that tangible metals may continue to play a key role in long-term wealth preservation and accumulation strategies. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying close attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
So this morning as I speak here, we're just around 5,200. So yes, and we've been to 5,600 as well. So I think he was pretty much right about that. And then on December 30th, silver had, it had made a new high a few days before, I think it was before Thanksgiving. It went up to 84. It dropped to 76. And I updated you on the, on the Gnome of Zurich, and he said, and I said, according to the Gnome of Zurich, the correction in silver could be over. And the thumbnail says his next target is 123. Yeah, that's the other thing. The Gnome of Zurich, he's done a lot of research, and a lot of his Elliott wave technical analysis doesn't just go back 5, 10, 50 years. It goes back hundreds of years. So he really looks at the long-term cycles. And he found that silver trades in connection to the Lucas number, which is a kind of Fibonacci number. So 123 was a Lucas number, and I think 49 and 77 are Lucas numbers as well. And if you look at silver back in 1980, 2011, those highs were just around 50, sometimes just below 50. So he Yeah, he thinks it makes a difference. And while gold, on the other hand, trades in terms of the Fibonacci sequence, which is slightly different. You might want to Google Lucas numbers and then Google Fibonacci and see the difference. But that's where he got that target, 123. And what was the high in silver in January? Well, 121. I would say that's that's right, almost on target in terms of the markets. I mean, $2 there is pretty amazing. And of course, we've had a correction. And the last update was February 1st, so just over a month ago. And what did I say? What did he tell me? Well, according to the Gnome of Zurich, the correction in silver could be already over. Well, at the time, silver was trading at 79, and as I speak here, we're trading just below 87. The correction isn't over yet, but I think it's almost about to end, and I think it will end personally, and so does the Gnome of Zurich on the upside. And the target, his target is 199 for the next leg up, because that's the next Lucas number, 199. And I've looked at this chart of silver, which I bring up right now, and he was looking at this as well, the daily chart or even the hourly chart, even though he looks at long-term cycles. In the short term, he likes the hourly charts, but I've brought up here for you the daily chart. And you can see that, yeah, the correction has continued. I guess, it's difficult sometimes to time these corrections. I think the important thing is to have the general direction. And yes, it's gone on for a little longer. Why do I think it's gone on for a little longer? Well, because the move up was so massive, the correction was so big, that it's taking a while for it to correct, to consolidate, because this is a triangle here, as you can see, and that's a consolidation. And I've known, that's what I learned from technical analysis, from working in the markets. It's one of the things that I did, was read a lot of books about technical analysis. I went to a lot of courses. And one thing I learned is that these consolidation patterns, they usually end 3 out of 4 times. They end up going the way of the previous trend.
Mario Innecco explains that silver is currently forming a significant triangle consolidation following its strong rally from around $50. This upward move, which began after the October correction, created a robust leg higher, and by projecting this move from the eventual breakout point of the triangle, the potential target could reach roughly $217 to $218. The breakout level itself is gradually moving lower as the triangle tightens, meaning the final price target may adjust slightly depending on the timing of the breakout. Nevertheless, this projection closely aligns with the earlier Lucas number target near $199 suggested by the Gnome of Zurich, supporting the view that silver may soon resume another strong upward phase, potentially accelerating the momentum built over the past several months. Innecco further highlights that the next leg in silver could happen rapidly once the breakout occurs, as overall market momentum appears to be building steadily. Despite ongoing geopolitical tensions and a relatively calm global market environment, he believes the focus for investors should remain on precious metals. Both gold and silver offer long-term potential, but silver stands out due to its historical role as money, industrial demand, and unique market dynamics. For these reasons, Innecco continues to hold and actively accumulate physical silver and gold, anticipating that once the current consolidation phase concludes, the next major rally could unfold quickly, delivering a potentially powerful surge in silver prices. Let's get back to the video.
The target would be around 217, 218, which is a little more than 199, but again, it's very close in the scheme of things. And if we take a little longer to work out to work to this breakout if we keep within this triangle for the next few days. The target will get a little lower because the breakout price will be lower. So yes, he still has that target around 200. And the most interesting thing of all, though, is that he expects that to happen fairly quickly. So there's a very good chance that we're going to break out on the upside of this triangle, and we're going to go a lot higher. And I've done some measurements because the trend here is from the beginning of November, right? Where we went from just below 50 after we had the correction from October, because it was in October, I think, that we went up to what level was that? 54. And then that was the first time it went over 50, like since 2011 and 1980. Actually, they didn't really go over 50 then. So it's the first time ever we went over 50, went up to 54, corrected back down here to, let's see, 45.50 towards the end of October. So I'm counting this major move higher here in silver, this leg up from then, or from around 50. And I've extrapolated it from the breakout of this triangle, which is a very steep line, as you can see. So the price for the breakout is getting lower and lower. I think yesterday was around 90. Today is around 89. Well, surprisingly, in terms of the other markets, things seem to be relatively quiet despite this war in the Middle East still raging. I think we're in the 12th day. But the focus here is going to be silver and gold today. And yeah, I'm holding on to my gold and silver for dear life. And I'm going to keep trying to accumulate or stack as much as possible. The more silver you stack, I saw a comment the other day, the less silver the warmongers will have to produce their weapons, right? It's going to make it more and more expensive for them. That's what we want. Buy silver, stop the warmongers.
Silver is navigating a pivotal consolidation phase following a substantial rally from the $50 level, and current technical patterns indicate that the broader upward trend remains intact. The tightening triangle formation suggests that once a breakout occurs, the next move could be both rapid and substantial, with projections pointing toward long-term targets well above current levels. Historical cycles, including connections to Lucas numbers, reinforce the potential for continued upward momentum, while growing monetary uncertainty and global tensions add further support to silver's appeal as a tangible store of value. As a result, the metal is increasingly seen not just as an investment but as a form of real money, encouraging accumulation and positioning ahead of what could be a powerful next leg in the silver bull market. What factors could influence whether silver successfully breaks out of its current consolidation pattern and reaches its projected long-term targets? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.